Okay, what's up, people? Excuse me. Welcome back to another stream. Hope everyone is doing well as always. Please also drop a like, subscribe to the channel. Excuse me. Uh, or you do go and hit the bell as well, so you don't miss out on any streams or uploads in the future. Of course, any requests, any pairs you're looking at, feel free to drop it in the chat. We'll go through a bunch of markets today. Of course, this is the last trading or actual trading day of the year. Tomorrow, the markets will be shut. So again, potentially, if you're looking for any kind of meaningful moves, probably best to wait till the new year started to commence. If you're looking for intraday positions, there could be some opportunities there, but then you have to be pretty strict with that as well. There's probably not going to be a lot of volume specifically today. So in terms of going hitting some big targets, it's very unlikely to happen. So you want to make sure that things are not really progressing well. You start to scale out the trade, especially as the day does continue. We'll probably start with the USD side of things, then we'll take a look at some of the yen pairs, and we'll look for on a bit more of a macro scale, kind of what trends can we look to follow into Jan, what potentially looks like it's healthy, what potentially looks like it's starting to die out, and we can discuss that on a bigger scale as well. Raphael, what's up? Good morning, hope you're well. Euro Aussie longs. Yes, we can take a look at that on the 4-hour chart, no problem. In fact, we can start with that as well. And of course, if anyone has any requests, I'd be more than happy to go through some pairs that you guys are looking at. But you said longs, you're on the current on the 4-hour chart. Okay, I can see some logic there because effectively the market is more or less in a range. Looks like we're pushing back towards the low of the range and could be looking to expand higher. Now, the way I see it for Euro Aussie is that the market is very flat, and essentially we do have a bit of a bearish channel here. The market has been slightly trending lower, not emphatically because we have still seen some highs and basically resistance formed around the 1.81 mark. But essentially, we have got lower lows and lower highs here. Now the market is pushing towards the low of the channel. If, of course, we successfully reject this area, we could potentially see a revision back towards the high of the channel, or at least potentially back to the high. So I do like the idea. I would wait for some more significance with the rejection before getting long myself. I like the location. I like how price is moving. It does make sense. It's just I would like to see a more kind of adequate rejection there to say, okay, price is really not breaking through this area. I'm expecting more upside. It's a nice 4-hour candle close yesterday. Close with some strength as well. And again, like I said, going into the last trading day of the year, we're probably not going to see price expand today. So it could be smart to wait till when the markets reopen to actually start entering positions because that's when naturally volume is set to pick up. In terms of location, in terms of how we're initially reacting with this area, I do agree with that bias. Longs in Euro Aussie do make sense. Of course, if price suddenly does start to break through the zone and we see something like this, strong closure on the daily chart through the level, of course, that's what would invalidate the idea, which is important because if we're going to have an idea, we need to know what the invalidation is of that idea. If we can have that in our minds, then we can trade with a bit more confidence because we know what we're inherently looking for us to be wrong. So yeah, I do agree with that bias. I would suggest that let's wait for price to react a little bit more of the zone, especially going into the new year, because I would happily see expansion today. And if things could still hold up for when the markets reopen, that could be a smart trade to take, at least back to resistance, supply, and potentially even the higher end of the channel, closer to 1.795, 1.8. So yeah, I do agree with that one, Raphael. What's up, Alex? Welcome to the stream. Hope you're doing good. Good morning, my man. I hope you're well. But essentially, with Euro Aussie, we do have a very flat market, which is just kind of stuck in this channel. So we've got that equilibrium, price at the low of the channel. There's only two things the market can do when we're at a little or high of the channel. It doesn't matter if it's descending or completely flat. It's either price is going to break through or it's not. Of course, you could have a false break, but full price not breaking through. It's a failed attempt to break through. So there's only two things that can happen. And if you can kind of wait and bide your time for price to kind of show you, okay, this is truly a strong rejection, then you've got probability on your side. And of course, if you see price having sustained breakouts, well, you know that we're going to get the latter, and price is likely to expand away from the range. At the moment, like I said, it's a bit early, especially going to the end of the year. Let's see how we progress through the start of the year, and hopefully there could be some nice longs to go back up again. And a lot of the minor crosses are similar situations as well. There are a lot of trends going on, and it's like, okay, these trends are starting to tire, but they haven't broken any significant structure yet. So naturally, still looking for continuation. Pound NZD, we still very much could see a push back to the high. Euro NZD, again, no significant break of structure, could still see a push back to the high. I'm not saying this is a great opportunity for a trade. What I'm saying is that we're not looking for the reversal just yet because structure is still being maintained, and a lot of the crosses are showing that across the board at the moment. CAD yen analysis, yes, we can take a look at that, Rich, no problem. So in terms of the yen pairs, specifically CAD yen, the trend is still alive and still well. Of course, we had that massive breakout post interest rate decision a couple of weeks ago for the yen, and they had that massive expansion higher. And if you look at the higher time frames, the monthly chart, which of course about some monthly candle closures, some quarterly candle closures as well. So those would be interesting to dive into into the new year, see what momentum is on a higher time frame. But you can see CAD is looking very, very bullish. We are coming back into supply, which of course gave us this bearish move, but the buyers are mainly in control. So what I would expect is probably a bit of downside as a pullback. If we can stay above just support, I do see CAD finding its feet again and pushing back to highs at 118, potentially highs 120, as similar to what other yen pairs did, euro yen, Swiss yen, pound yen, and to a degree, dollar yen as well. So I do think CAD yen is still a very healthy trend, especially in the higher time frames. Of course, from a data perspective, we could still see a bigger pullback. Well, this could still happen, but I don't see a shifting structure in a major fashion. So in terms of opportunities for CAD yen, would I be looking to try and buy this market? It still looks relatively healthy. I can see we are tiring now because you can see if you look at the highs prices created, the highs are not being are less significant with each high created. The prices forming a high, breaking the high, but the distance we break is less each time. So you can see the distance here is slightly more than the distance here, and of course the distance there is very minuscule. So the market is tiring, which tells me a bigger pullback is likely to commence. And then hopefully, if that bigger pullback can start to fail, and then that'll be the time to start getting some pretty nice swing trades and trade it towards that monthly target I mentioned. So if you're looking at CAD yen from a more of a intra-week perspective, yes, I would still be bullish. It's just I wouldn't be looking for a huge expansion because the market is tiring. So maybe we get another move back to the high here. We are approaching some nice areas of demand on the left. Perhaps if you can see price go and break some structure here. So if you can get price to go and break through this high, that could be a short-term trade back into the high there. I just wouldn't be looking for anything crazy. Of course, you can still trail stops. You don't know how far price is going to go, but there's some visible signs that we are tiring. And if we can get that bigger pullback, the buys will be even better. So that's kind of what we're looking for going into the start of next year. But yeah, I'm not interested in shorts in the market. Still seeing consistent higher highs and higher lows. So if we're looking to long, we're either waiting for that bigger pullback, waiting for this structure to reclaim again and show some more bullish pressure. Then, of course, we got clear targets back at the high, 114.5. So for me, CAD yen, and we can look at the rest of the pairs as well. Everything still looks very, very bullish for them on a higher time frame scale and even intra-week as well. Of course, a bit bearish recently, but nothing significant has shifted. So hopefully that made sense for CAD yen. Kingsley, what's up, my man? Hope you're doing good. I am doing good. Thank you for asking. Yes, I did have a good Christmas. Thank you. Hope you had a good Christmas as well, and a good New Year's right around the corner. Appreciate it. Yes, we can take a look at USDR for you. No problem. Is it still bearish? I haven't actually looked at USDR in a while, but we could definitely go take a look. What's up? Cool. Profil. Probably saying that incorrectly. What's up? We can take a look at Euro USD as well, no problem. Kingsley, secondly, will there be a market impact regarding the events happening between China and Taiwan gold in particular? Absolutely. I mean, I don't know necessarily what the impact is going to visually look like in the chart, but of course, big scale events like that do impact markets. People withdraw capital, place capital elsewhere, especially on the USD side of things as well. The China Taiwan US situation is definitely a big event, so 100% it will affect the market. Of course, in terms of how and how long it will affect the market, that's where reading price action comes into play, because you have the fundamental event and then price will react to it based on how everyone's interpreting the fundamental event, based on what their actions are. And then price will show you what the next likely or what the consequence of that will be. For example, does USD start to trend? Okay, that's a catalyst. Now we get the consequence, which is the trend, and there's a trade opportunity off the back of that. But of course, with those events, it's not like a specific date. Something's going to happen too. It could be over a course of time. It could happen very quickly too. And a lot of that is just kind of just speculative, kind of just guesswork, really. So my biggest advice is with those type of events, yes, they're very important. Yes, they could impact the markets. But it's important to see what happens with the event and how price reacts to it as well. That's when you actually have a good educated guess on what the outcome could be. Because what a lot of people do, they will look at an event and they'll just trade the chart based on the event, which makes sense. You've got a good understanding. But if the chart is not agreeing to whatever your bias is, then there's no point. You're just taking a trade against the market sentiment. So you need to make sure they align. So yeah, how they impact the chart, that's something only the chart will reveal. But absolutely that can impact. We'll go through USDZAR first. I'll take a look at Euro USD. Alex, yes, we can go through GJ, BTC, oil as well. GTAL, we just had a look at Euro Aussie at the start of the stream. So if you scroll back, you can take a look there. But I will go through Euro NZD for you. Anyway, let's start with USDZAR. So USDZAR still trending bearish. Looks like USD is not planning to be against the South African rand at the moment. If I go to the higher time frame, not looking good. I can't lie, especially with that one week that we had a few months ago. This week here, that was price trying to reclaim the trend, trying to continue, trying to persist. And now that we've rolled over and have actually broken through some structure as well, that's not a good sign. Not necessarily a good sign in terms of the long term. The market is still very much in an uptrend, but it does mean that we're probably going to push to lower prices to go recover that. We didn't have enough buyers to see a continuation here. Therefore, price is going to move back towards where it can find more buyers, where it can agree on price, then potentially have another attempt at trying to continue the trend. So I'm looking to a pullback anywhere between 16 to 50, 16 to 40, really. This range here, of course, is a pretty big range, but that's where I'll be expecting price to roll over to. So in my humble opinion, it does look like there's a lot more downside to experience here for USDZAR on a high time frame perspective. Of course, this is the weekly chart still looking very bearish. Daily chart still looking very bearish as well. I would wait for like an up move to kind of maybe trap some buys in and then see if that up move fails. And that would be a nice swing opportunity to take it back down again. Because if you short here, the market is a little bit tired, it's a bit exhausted. Not to say that price can't still go down any further, but you're not looking for like a big swing here. You're looking to play day by day price action, because when we're exhausted, we need to push higher to go and repair ourselves before we continue lower. Most likely, of course, we could still dump, but the probability is not very high, especially on an FX pair like this. So when you get these kind of moves here, where price has that surge to the upside, back into supply, back into resistance, those are the times you want to be looking to short the market on that failure to repair. Because of course, if this bullish move went and broke structure and broke through the highs there, that's something significant. But if we have another bullish move that just respects supply, that's your shorting opportunity, particularly from a swing perspective. And I'm pretty sure you do get a positive spot selling USDZAR too. So you're getting paid to hold the trade too. So there's nothing, you don't have to be worried about that either. So if you can get the up move potentially back into this area. We've got strong support there, strong supply there too, back to 16.9. That's like a really nice turning point to play some shorts from a swing perspective. You can add to that as you go along, and you've got some real downside opportunity there too. So yeah, UTR to me still looks like a really good set. The only way I would rethink things if we had an up move that starts to break structure. If that happens, then yeah, I would rethink that bias. As long as we maintain, it's looking pretty bearish to me. In terms of Euro USD, so Euro USD, we spoke a lot about this yesterday. It's still kind of inherently bullish, but I spoke about the weekly chart. I spoke about this level here, which price is failing to break through. You can see we've had numerous wicks into this area, so this is clearly a level price has established that is failing to break above, and it's going to need a bit of a catalyst, a bit of a kick to see that happen. Of course, there's only one or two things that's going to happen here. Either price eventually is going to get the momentum needed to break the level, or we're just going to roll back over and this range is going to continue. The trend is up. If you go to the lower time frames, daily charts are looking fairly healthy to the upside. 4-hour charts are looking fairly healthy to the upside. Can get the words out there. But of course, we can see there is some failure at the moment. Price is failing to create new highs past this obstacle. So what I mentioned yesterday, I said if this trend is going to continue and we are going to break through this weekly resistance and push back to highs to our left, then I would say it's quite important that we do break above the high here and we stay above it. If we do that, then the buys become very high probability. This becomes our next target. You can look for buys intraday swing along the way there. That becomes a really nice opportunity. Now we're confirmed above weekly resistance. We can also support that idea with a closure above it as well. And then the continuation trade becomes very likely. If we see another week where price does fail to break above this level, and we see another wick above this level, it could start to mean the topple of this trend. Now, I wouldn't categorically say it's the case until I see some lows being taken out. So I want to see this projection maintain and price start breaking through the lows. If that's the case, then we're likely to head a little bit lower. I wouldn't necessarily say I'm bearish and go back to critical lows here. I would just say the market's probably in equilibrium in a bit of a larger trend. So at that point, I'd probably back away from any meaningful swing on Euro USD because I'd just say the market's flat, it's ranging. I'm not going to spend my time trying to decode the range. So yeah, Euro USD, we are bullish because of pure market structure, but we do have an obstacle above our heads, which we're clearly failing to break through. So does that mean we just blindly follow the trend? Absolutely not. Does that mean we look to sell? Absolutely not either. We're in a state where the market is deciding. And of course, with a low volume day like today, we're probably not going to find that decision today. So I will be patient, see what happens going into the new year, see how we progress early Jan, and that could potentially shape our buys for late Jan or even go into future months as well. If you're looking at day trades, it does get quite messy. I would probably stay away from intraday positions. This is just a really messy chart, price action. There might be some opportunities if you push back into the low. There might be a bit of a short-term bounce. That's the best you've got. There's no real consistency on the 50-minute chart apart from how we're just kind of oscillating back and forth. So unless you're looking for like a quick mean reverse trade off a low, I can understand the logic there. Anything more than that, trend continuation, expansion, breakout trades, I think that's the best time and place to look to do it. So Euro from a larger scale swing trading, patience required. Intraday, you might find a nice short-term buy there off the low. Yeah, price action isn't great. We'll go take a look at TJ, BTC, and oil. Yes, we can take a look at pound USD as well. We'll go Euro entities, silver, gold. Yeah, we'll go through those. It's a bit interesting price action on silver, gold. I can't lie. Very, very interesting moves yesterday. So yeah, we'll definitely go through that. But I've got some requests to go through first, and then we'll take a look at both of those. So the GJ very flat, and that's exactly what I mentioned yesterday. We haven't progressed since then. Of course, the trend is up. The trend is healthy and still up. It's just that we've been flat over the past few days, and of course, it has been the festive season, so um, that's kind of a likely outcome we could see. But again, the market is just ranging in this area. So, what is the plan if there is any? Uh, if this was me looking at the chart, I would just hold back. It's uh, it's pre New Year's Day. The market's about to close for the year. Are we going to see a breakout today? Most likely, we're not. So, if we're not going to see a breakout today, then what could we see? Well, we could see price potentially fluctuate some more. Is that really part of my plan? Is that an opportunity that I want to try and trade? Potentially, it might be, but for me, it isn't. So, with that summary there, with that conclusion, it would just be a pair that I kind of skip and don't pay attention to. Not really providing much opportunity. Is that about to close in a few hours' time there. So I would leave pound yen alone, especially intraday. This for me is just all noise. Any opportunities here, you're fighting a losing battle unless you're very short term, maybe, but anything meaningful is just pure noise. So pound yen, I don't have much to say apart from let's wait till New Year's. Let's wait to see how this trend does pan out. Does it break higher? Does it want to come back and find some more support before continuation? Well, that's what opportunity could arise from. Anything else is just kind of back and forth price action. In terms of BTC, again, more noise with this one. I like BTC to be honest, especially from a macro perspective. I like where we're trading back at major demand to our left here. We're still holding that. You see numerous wicks into the zone. BTC does have that potential to see another expansion higher, or at least just coming back to test this range here. I'm not going to be so overly confident on new highs because there's clear evidence to say that this bull cycle is starting to really tire now. So I'm not going to be delusional, just say, okay, we'll go right back to all-time highs. But if we do reject this well, I would expect at least, excuse me, a push back to this next range. So long term, there's a nice swing opportunity potentially forming. As I go to the daily chart, it just looks very messy. 4-hour chart, more messier. So I wouldn't do anything at all here. This is pure noise, pure accumulation, buyers and sellers in equilibrium. No one's really winning here right now, and they haven't done for the past few weeks here. So pure noise on BTC. You might find some temporary opportunities at the high of the range, some shorts at the high, potentially some longs at the low. Not really my style here, but as soon as I can see price start to expand, especially if we start to expand higher, well, that's where we start talking. That's where there could be some opportunities to take that higher. So BTC looks like it's just a sleeping giant right now. No new information for the past 3-4 weeks. So I would be very, very neutral on BTC, but just kind of keeping an eye on where we're trading. Oil's interesting. Of course, it has been bearish, but it has come back to a significant low. Looks like we're failing to break through that low at the moment. It's still bearish. So it's not a situation, okay, we're bouncing here, let's shoot for the moon. Price has still got 6 lower highs here, which is still trading below. You can see every time price pull back into a high, into a supply area, we respect it every time. So until that theme starts to break, until I start to see price, break through multiple supply areas, okay, that's something maybe our next move could be back into this area, a more significant supply area. These are a bit more minor areas of significance. If price starts to break them, we're probably going to be attracted to a more major area of supply, which would be 66, 65 up there. And then there could be some nice opportunities to buy it towards that area or maybe sell it back down again. So what I'd be looking for oil is simply what we do. If we move this up the way, simply what we do in this zone here. Because if we fail this zone, well, I'm expecting a roll back over to lows. If we manage to break the zone, like I said, a bigger pullback into more significant higher time frame areas. So my focus would be 59.60 in and around that area. And you can probably monitor that on the 4-hour chart. So yeah, that's kind of my take for oil. We will take a look at euro entity, pound, and then I'll go through silver and gold. Roddy, what's up? Welcome to the stream. Hope you're well. Look at gold. I guess they said it was quite hard to refine. Look what happened. Well, was broken when our clean breakout, two when our candles were hitting the previous next all-time high. Area of interest. Yeah, yeah, we'll discuss that actually, 'cause that's a good point because we were discussing that yesterday, weren't we? We'll take a look at that in a bit more detail. Currency is slow today. Yeah, once it's the last trading day of the year. I don't expect many markets to be flowing well. Currencies, especially, will be quite slow. Some less liquid markets could still be fairly expensive, could still move a little bit because it's not necessarily the volume that creates the movement, it's the lack of opposition. You know, if you've got a big buyer position that comes into the market and there's no selling pressure to oppose that, well, then the market's going to move. With the currencies, everything is fairly equal, it's just volumes just drop, so you're not going to see much movement. But crypto, you can still see a bit of a move. Metals potentially, indices potentially, but they're quite liquid as well. Of course, the less liquid you get, the more kind of volatile they can still be, even on a day like this. But we'll take a look at pound and we'll go for UNZD and then we'll take a look at silver and gold. So pound USD is still pretty bullish. I said on the weekly analysis, as long as this bullish structure maintains, everything is still pointing up for gold, for pound USD. I said if price breaks through this, that's when I would look to rethink my analysis. As long as we stay above structure, well, I just look at it as a failed breakout of these lows, price reclaimed it, and now probably pushing back towards the high of the range. Keeping it very, very simple. So pound USD, I am pretty bullish back to 1.38 roughly. This area here is kind of where my target is. And I will maintain that bias as long as this structure does continue. So I did say it would be nice to get a pullback pound USD into this area, which we haven't kind of seen. And we've seen a slight pullback, but it would be nice to get a slightly deeper one. I mean, it's barely a pullback, really. It's more just kind of consolidation, to be honest. So it'll be nice maybe if Jan can open up, see it move down, respect support, and then we get the next swing. Of course, if price does just expand from here, well, this becomes an interesting area again, and then that could be a nice pullback and continuation. But yeah, pound to me, expanding higher, looking pretty bullish. 1.375 looks like a big draw on price. Euro entity, this is still just clawing itself to bullishness. We haven't broken through any meaningful structure, so I can't say the market is shifting bearish. Yes, we might be tiring, but the trend is still persisting, which is the important part. I would say our last bullish leg didn't really give us much. You can see we stalled here, a lot of wicks, consolidation. Now we're back there again. There potentially could be a move for us to roll back over, but again, in this bullish regime, I'm not going to be so quick to be looking to sell the market just because I know in terms of probability, I'd rather be a buyer than a seller. If price starts breaking structure, okay, that changes things, but we haven't done that yet. So it's not a time to buy because we're coming back into some solid resistance. I wouldn't necessarily say it's a time to sell because we're not really trading the best cycle for that. So if we're looking to short, I would wait for some structure to break. If we're looking to buy, I'll wait for this to start to break, and then that could be something to trade back to highs. So I would say we just got a lot of contradiction right now for UNZD. I mean, not to say that we can't respect this area and roll back over. It's just I wouldn't necessarily bet on that in a bullish trend. At least not for a meaningful move either. Maybe a day or two, sure, but I wouldn't try and bet for structural breaks or big continuations. It's just not the best time for that. So yeah, UNZD, I would hold off at any opportunity. The buys don't make sense really at the and the sells still a little bit aggressive in my opinion. Unless you're looking for short term, then you can probably squeeze something there. But if you're looking for anything more than a day or two, I think you might run into some issues there. We can take a look at gold and silver. We'll take a look at gold first. Okay, both gold and silver, big expansive moves yesterday. Really, really exaggerated bearish day. And it's quite interesting to be honest, because of course they've been so bullish. And it's like, okay, we're coming to the end of the year. A lot of people are just taking profit. I think that's kind of what's potentially happening, especially for silver. Silver had a crazy move last Friday. And then potentially a lot of people are just kind of locking in some gains for the year there. and we could potentially see even more pullbacks going to Jan. But of course, has this had a massive impact on the trend? No, the trend is still very much up. In terms of gold, I must say though, I don't like the fact that price is now traded back below this area. That for me is a slight worry. We'll see what this candle does bring, because of course, if this candle does just close right back above, which at the moment it looks like it might do, well, then it's not an alarm bell. If this candle does close again below this area, that's the alarm bell, because now we've got two closures below, especially if the third one remains below as well, then the next best opportunity for me for gold would be looking like this: pull back into structure and expansion lower. If, of course, this was just a false alarm, just a very volatile move, price now closes back above the area, starts to hold as support again, well, we could very much see price climb back to highs and the trend continues like nothing happened. So I need more information. You don't really want to just use one candle and make that your judgment, because again, everyone's reacting to everything. Everyone sees one candle, "Oh, we're looking really bearish, let's start selling, selling, selling." You want to be a bit more patient than everyone else, and that itself is an edge, to be honest. If you can be a bit more patient than the average trader, it allows you to wait for more information, and when you do place your trade, you're more informed and you have a bit more conviction when you do place that trade. Of course, people might have the full process that, okay, if I do wait for more candles while I'm late to the party, everyone else is already in the trade, I'm entering a little bit late. That's completely fine, because most price action is just pure noise. So 90% of the time when price expands high, expands lower, especially in FX, there's actually nothing to be worried about. Let other people chase those moves. You want to chase moves which actually have some meaning, some significance, and some stability. And then that's when you look to get into those trades. Just by doing that, it will give you um, so much more conviction with your trade and so much more confidence, because you're not just reacting to the first major move. Let other people do that. So in terms of gold, we'll see what we get the next 2, 3 days. That will give you a lot of information about this bearish move, whether this bearish move actually has some real meaning, or this bearish move is just price going back to retest structure. I just kind of overshot it slightly. In terms of the more intraday transaction, let's jump to the 1 hour chart. So yeah, the 1 hour broke the level very significantly here, and then you can see by the next candle already pushing back into the level, which is what Roddy was mentioning. Like I said, you're going to get some situations where you get the breakout, and then it's just so expansive you don't really get an opportunity to trade it unless you're short to the breakout. And this is the trade-off of trading, funny enough, is that you're going to have rules in place, you're going to have systems in place which don't allow you to trade every single move or catch every single trade, but what they do allow you to make sure that you position yourself for the right moves, the ones that are credible, the ones that are significant, the ones that have meaning. And of course, that means sometimes you will miss some moves, sometimes you miss some breakouts. That's just the price of having some discipline. You're going to miss on other things. If you're always chasing everything, you have no discipline, well, then of course the results are not going to reflect what you want them to reflect. You have to have some constraint. And in this case, this very strong candle break through the support level, and then the next one hits the level. Yeah, the opportunity is kind of gone at that point. Move on to the next situation. So what I'd be monitoring now with gold is how we negotiate with this level here. We did close below. Let's see what this candle does. Does it pull back at the end of the day? Okay, that's something to look into. Does it close right back above? Okay, that's something to look into. Let's see what we do the following day. Does the following day still maintain that? Okay, that's some significance now. Maybe this is just price holding support and we kind of shot it slightly. In that case, I expect the trend to continue, the bull cycle to continue, and at least push back to highs. In terms of silver's case, nothing's really changed here. Of course, that's a very significant bearish candle, but it even failed to close below the last candle low on the daily chart. So there's no change in structure here at all. Yes, it's very volatile. Yes, it's a very big candle, but it hasn't even had an effect on the candlestick structure, let alone major structure. So silver's still very, very bullish. Despite the aggressive move lower, it hasn't done anything. It doesn't mean that, okay, just buy back to highs. No. What it does mean is don't start looking to sell. Um, don't look at the fail break of structure as, okay, just look to long. Look at it as, okay, that makes me not look to sell the market. Now look to see how price does progress because, of course, it was still a very significant move lower. Does price now still start to trend higher again? Do we still start to build some higher highs, higher lows? Okay, that builds credibility to the trend now. Pullbacks become consistent. Now the buys make sense to try and take this back to highs. If we start to consolidate here, well, that's something significant too, because we've had this big correction, but price is now failing to continue higher. That's something new to look into. Now, if that consolidation does continue, and then maybe we break lower, that's new information as well. And then at that point, you probably say, okay, we've probably got some more downside to give. So just being patient allows you to get more information, allows you to be a little smarter with your trades, not reacting to everything. A lot of people are going to see this bearish candle on silver, bearish candle on gold, start reacting instantly. They're either selling their long positions or they're starting to sell the market. Don't be so reactive. Let the market kind of give us more information. Because we're not fortune tellers. I have no idea if this is going to be the top for silver and this is going to be the top that lasts for like 2-3 years. It could be, or this might just be another correction for price to keep ripping to the upside. We don't necessarily know. But as time progresses, the answer to that will start becoming more true, and eventually we can have some conviction for a trade. So I would just be patient with gold and silver. They haven't done anything too significant where I say we're collapsing, but let's see how we do persist. Where was I? What's the best time frame to trade BTC? Good question, Alex. Not a lot of people talk about that. Well, if you're looking to trade BTC in terms of entries, because a trade is not just necessarily time frame. A trade is a predictive move in the market. So you're basically asking what kind of scale of move should I be looking for? Well, if you're looking for a healthy scale, I would say you looking at the daily chart in terms of looking to foresee the move. I wouldn't go below the daily chart to try and predict moves, try and predict market structure, because that's where things get very noisy and less reliable. Because BTC compared to like USD, BTC is very, very volatile. It's less liquid, and big players can come into the market and just mess things up very a lot. Your USD, you can trust price action all the way down to the intraday timeframes because of how liquid and how traded it is. So you can trust the lower timeframes. You can't trust lower timeframes to the same degree as BTC. So I would say you shouldn't go below the daily in terms of your predicted moves or the swing you're looking for. You can drop to like an hour chart to scale entry and maximize your short. Absolutely. That's why I think the lower time frames are really good for cryptocurrencies, because if you can get enough entry, you can get very, very big RRs on a trade. But the move you're looking to catch is at least a daily move. So for example, if I go to BTC and you're looking for a trade, I wouldn't drop to like an hour chart and then say, okay, I'm to trade it back to this high. That's just pure noise. There's nothing to portray that at all. If I'm on a daily chart and I see prices respecting a major zone, momentum's picking up, and this becomes my move, that's something structural. That's something where bigger players actually put money into the market, and we're seeing a change in regime. There's a big contradiction between buyers and sellers there. That's something meaningful to trade. And then I can drop to like an hour chart to find my entry and just maximize the risk reward there. Absolutely. So if you're asking what time frame, I would say daily for your price and your analysis, but you can drop as low as you want for an entry. That's just preference as a trader. You can even trade in the daily chart if you want to, if you're not really too bothered about maximizing the entries. But yeah, I wouldn't use intraday price action to form bias on BTC. I think that's you're pushing it there. Okay, so we had a look at pound USD. If you scroll back a little bit, you'll be able to see it. Dollar CHF, we can take a look at that, no problem. France, how they're analyzing the lower time frames. Well, we kind of just went through that on gold and silver. Like I said, lower time frames, I'm kind of waiting for time to tell because of these exaggerated moves on the daily chart. for gold and silver. So I wouldn't look to read too much into the lower time frames right now because we've had these exaggerated pullbacks, potential pullbacks, could be tops, we don't know. We've had these exaggerated moves. So again, lower time frame is to execute your high time frame bias. Don't try too much to develop a bias on the lower time frame. Uh, your high time frame is where you want to be looking to plan a move. And the lower time frame helps you execute that move. So from a lower time frame perspective, I wouldn't get too caught up on what price is doing right now, especially on a day like this, last trading day of the year. I wouldn't expect any big moves, to be honest. I know we had one yesterday, but I wouldn't expect any crazy moves today either, or even worthwhile to get involved. So I want to see how we progress over the next 2 3 days, and then that could help develop a bias, and that will help us trade the lower time frames with a bit more precision. So that's kind of where I would put my focus on. But I'll go through dollar seat chef. We'll take a look at Aussie dollar as well. What's up, Yusuf? Welcome to the streamer, man. Hope you're doing good. Having a great morning. Thank you for asking. Hope you're well too as well. Map up structure on gold on the 15. Okay, we can have a look at that too. Anton, silver pattern similar with gold. Investment grade different. Trade volumes differ. Yeah, I mean, I do agree. Silver and gold very, very similar by nature, both metals. Um, investment similar as well. Of course, volumes are different as well too. So yeah, I agree with everything you said. Mike is bugging a bit. I think it might be the internet connection. Apologies if it is continue. Let me know if it does continue, Yusuf, or if it does improve actually. Let me have a look. See. Yeah, I'm connected to the correct mic, but yeah, I think it's the internet connection. It's not that stable where I am at the moment. But yeah, let me know if it does continue. Anyway, we'll take a look at dollar CHF and Aussie dollar. Of course, if there's any other requests, feel free to stick it in the chat. And if you are enjoying the stream, by the way, find it useful to drop a like, subscribe. It does really help out. And of course, share with your friends, your trading friends as well. It helps grow the channel. I do really appreciate that. In terms of dollar CHF, it's very flat. It looks pretty bearish, I must say. I would say last week's candle was actually quite significant because we actually did close around here. You can see if I map out this low, which is where these wicks. Well, this week's candle actually shows some aggression past that level. Let's see how this week's candle does close as well, because again, one candle isn't necessarily so definitive. Successive candles is definitive. If we see this candle right back above the next month, well, this just becomes noise, really. But if we can stay below, maybe even start firing some wicks in the opposite direction, into that level, well, you potentially got a breakout there in your hands for the CPF. Market is very, very bearish. High time frames are pretty bearish. You've got all-time lows on your left over here, which is probably where dollar CHF is headed towards longer term. And of course, USD is looking pretty bearish too, so I wouldn't be surprised. And CHF is still quite strong too, so you potentially got one of the weaker currencies against the strongest one from a macro perspective. So that trend still does have fuel to keep going low. So looking at dollar CHF, I would be favoring a lot more downside. Again, I'm not saying shorts just yet. Like I said, let's see how we progress with that weekly level. I would still say lower time frames are still shorting directly to support there. So the shorts are not here yet, but they're hinting at it. We're hinting at a breakout lower. Only time will tell there, and that's where the patience comes in. Taking shorts now is a bit premature. You could very much be in some drawdown unnecessarily there. So yeah, dollar CHF, nothing to do now because it's just pure range play. Would I be looking to try and buy the low of the range? Potentially, but I would rather be a seller here. Wait for the breakout. There might be some shorts and longs off the back of that, but that's not really where I see the most kind of opportunity. I see opportunity if this can break out lower and we can start trending lower. The all-time lows down here look like a threat now. I wouldn't be looking for that in one move, but that's the direction I want to be trading. So Yeah, short-term buys make sense below the range, especially if you can project it well. I wouldn't say we're seeing that at the moment. Um, but in terms of the bigger move, it looks like we're hitting to the downside. In terms of Aussie dollar, very flat market. It is shifting higher. I do think there could be a bit more upside for Aussie dollar because this is essentially the range we're looking at. We've got the low of the range around 0.618. We've got the high of the range 0.68827. It looks to me that we've got miniature range here, which price looks like it's breaking out of. It's funny enough that this range actually falls within the larger range. You can see this sort of failed attempt to break through the low, price recovered that, start to range in the middle, now break to the upside, if it stay above price there, stay above that structure, well, there's a good chance we push back to the significant high of the range, 688. So I do expect to see more upside for Aussie dollar as long as we don't start breaking through structure back underneath, because then we're back up in the range, we're back up in the noise. I don't see much opportunity inside that area. If we can stay above this area, if you utilize this as support, which looks like price is doing at the moment, well, this could be a real move there back to 0.69. For excuse me, for these decent range scope there to trade. You don't have to get the best entry to make a meaningful trade out of that. You can either scale to a 4-hour time frame, which entry and still extract some decent R from that move. So Aussie dollar stay above 0.665. We're looking at bullish move. I'm pretty bearish on the DXY. I've got a similar scope for this one. Again, DXY is in the range here as well. There's your equal highs, there's your equal lows. And there's your failure for a breakout. Price is broken through numerous structure. Lower highs maintaining. As long as that's the case, DXY has a pretty good chance of moving back to support here at 96.5. So if the dollar has that potential and likely fulfills it, well, that's going to add fuel to the fire for Aussie to do the opposite and trend higher, of course. And I can see a lot of those moves happening for a lot of these USD pairs. New Zealand dollar, not so much, but dollar CHF, I can see this potentially breaking lower. So there is a consistency there between the USD pair. USD is looking pretty weak. We're not seeing any signs of that changing. I would say what would invalidate that bias would be a move above this prior high. If I see the dollar go and break that on the daily, then yeah, that would make me reanalyze. It won't necessarily make me bullish, won't invalidate the bearish bias completely because the kind of range around here then continue later on. It just means I'll probably pause that bias for now and be a bit more careful with that trade. But yeah, Aussie dollar, I would expect more upside. I do think price can push back to structure a lot higher up. We can take a look at the gold structure in the 15. So like I said, in terms of direction, I'm waiting for the daily candle, multiple daily candles to give me a bit more information because we've seen this aggressive candle. We don't really know what this means just yet. We've come back into structure, closed slightly below it, not necessarily the biggest close you'll ever see. So it's not like we completely obliterated this level. We can reclaim it very quickly. And at the moment, we are doing that. We'll see how the candle does close by the end of the day, but it's not a significant break where I'm ruling out recovery. So I want to see how we progress, and the next maybe 2-3 days will hopefully give me some adequate information whether this is just support holding and we're likely to continue breaking through, and perhaps we're going to start looking to trade back to some of these areas. So I still haven't decided that, which means I don't really have a high time frame bias at the moment for gold. Therefore, intraday price action does lose a lot of meaning because I want to make sure I'm utilizing my high time frame advantage when I go to a low time frame to analyze market structure because I'm using the high time frame to help me understand what the lower time frame is doing. So if I don't have that bias, have that advantage, then I would be very, very patient for anything I do on gold here. But yeah, for gold here, it looks like we've got that expensive move, and now we're seeing a very correcting move back up again. So is there much of a trade here? Not really, unless you're looking at something extremely short term, because now we're starting to create some bullish structure. There's not a lot of bearish structure above our heads. So perhaps if you can pull back into some demand areas on the 15. This could potentially give you a slight bounce, but that's about it. I'm not forecasting a complete recovery. I'm not forecasting potentially price expanding lower because I don't have that forecast. I don't have that high time frame advantage to help the direction. All I can forecast is the continuation of what price is doing at the moment, which is a very sloppy, very slow uptrend at the moment here. So if you can pull back to major structure within that trend, project it well, you've got a good chance of price returning back to highs. That's the only logical move I can look to scope. And of course, if this fails, well, then we kind of completely that too. But yeah, anything more significant than that, anything back to this area, that's just an educated guess. You don't really have a lot of evidence to say price will get there. You have a lot of evidence to say price will expand lower. So you just have to trade within the confinements the 15-minute chart is giving you. So I would be extremely careful there on the 15. It might be a short-term buy, um, but that's about it, to be honest, with gold. And silver too. I want to see what the high time frames do with this move, and then that will give me more clarity going into price action later. What's up, Gib? Welcome to the stream. Hope you're well. Which pairs or instruments you suggest for profit and fund challenge, and how many trades per day? Good question. Which pairs of instruments? Well, I would say if you want to keep things very clean and make sure everything is working for you, you want to stick to the major currency pairs because minor currency pairs, they will have higher spreads. Trading conditions won't be as good, slightly more gappy as well, a lot more grit over weekend, overnight. Spreads will widen more dramatically during news, more volatile by nature. So if you want to make sure that you have everything kind of working for you, or you're making it slightly easier for yourself, stick into the major currency pairs, so euro dollar, pound dollar, Aussie dollar, New Zealand dollar, dollar yen. I haven't missed one out, dollar CAD. Dollar CHF, probably not. CHF pairs are always a little bit touchy-feely, so I'll probably do dollar CHF. But if you stick to those, you are allowing yourself to trade pretty much the best conditions you can find in FX. Minor currency pairs, you can still trade, you can still make profit from them. You have to be more careful. And like I said, if you want to make sure everything's working for you and a challenge where things are more difficult, even psychologically, it's just gonna make things a little bit harder. So I would stick to majors. Um, in terms of how many trades per day, keep it very, very short and sweet and just go max maybe 2, 3 per week. So I wouldn't even put a cap per day. Per day always, because if you take a trade, you lose, and then you go to the next day, your instinct will be trying to recover yesterday's loss rather than actually find a good trade for that day, if there even is one to begin with. So I would say max two, 3 per week, which slows everything down. A lot of people want to pass quickly, which I get it. Who doesn't want to pass quickly? But unless you've got money to burn, so you're just going to be churning, challenges. If you fail one, not a big deal. You just buy a new one, and that's your strategy. Okay, fair enough. But if you don't want that to be your strategy, every challenge you take is beaten, then reduce your trade frequency to max two per week. That makes you patient. That makes you um, more disciplined with the trades you take because you know you've only got so many bullets in the chamber. You don't want to waste them too quickly. It allows you to think a bit more before you take your next trade too. So I'll cap things 2, 3 trades per week, makes everything a little bit slower. If you can even cap it more, that'd be even better. And stick to the majors; they'll give you the best conditions. No problem, Yusuf. Happy to help. LFTJ, that gold meltdown, but I feel it's more of a liquidity pick before breaking the upside or vice versa. Yeah, I'm just waiting for more information, LFTJ, because of course this bearish candle, especially on the silver as well, it hasn't done anything too significant. It's not like price is broken within this, this high. It's not like price is completely closing down here. It's just about closing below. And the way I've drawn it discretionary. People can draw it slightly different. So I wouldn't say it's such a significant recovery of that level. And I did say coming to the week, the plan for gold is to see if we can respect this level. If that, if gold can respect this level, then I'm still bullish, still looking for a pushback to highs. The trend is still safe in my eyes. If we now stay below this level, it's still technically safe on a larger scale, but on a short-term scale, I would expect some more downside. So if we hold below this, that's a bit of a red flag for gold. If we hold above it, I think the buyers are still in control. Maybe this is just a bit of profit taking as we go into the end of the year. And I wouldn't be surprised if we start to rip back to highs again. So I'm waiting for a bit more information before I say which I expect or which direction I'm leaning towards. Right now, I've only got that one candle as our information. This next candle is still completely missed it there. This next candle is still being traded today. Um, I want to see how that candle closes, how the next maybe 2, 3 daily candle closes as well, and that'll allow me to educate guess on the price action. But I'm not going crazy with this bearish candle. A lot of people are going to start panicking now, either start selling now, which I think is the absolute wrong move to take. This is a very bullish market. Zoom out and look at the bigger scale of things. What's that one bearish candle got against this huge trend here? It's barely a dent in that larger trend. So starting to sell just because of that candle there is a very, very early, premature, prediction market. I mean, it could be the top. We don't know. But you're going off such little information there. So my default estimation for gold is that the market's still bullish. But I just want to see what we do with this. If we can hold above it well, that just answers my bullish bias. I would expect us to push back to highs. If we don't hold below, then I would expect a deeper pullback. I'm not expecting us to sell off, but perhaps pull back to maybe some of these areas, and then maybe we see the trend continue later. So yeah, that's kind of my take there for gold. Yusuf, please last press Aussie CAD in the 4 hour 15. Okay, we can take a look as well, no problem. Happy to help, give no problem. LFTJ used advice is just be patient with good setup, of course. I managed to pass prop both phasing will be at something months. I think that's the best way to explain it, LFTJ, is that you can't necessarily predict your pass, the period it takes you to pass, because you can pass very quickly if the markets are presenting pretty good opportunities. And of course, if they're not presenting good opportunities, then it's your duty to stand down and buy yourself some time. I think that's the best way, and that's actually a really good metric to understand your maturity of trading, because a lot of people treat each trading month as the same. If you average like 10 trades a month, everyone's trying to look for those 10 trades a month, when each month doesn't deserve 10 trades, and some months deserve more than 10 trades. Um, and you have to be able to kind of detect that and say, okay, maybe this month is not really performing quite well. Let me be extra patient this month, or this month is providing so many opportunities. Structure is pretty much in my favor. Momentum's there. It's ticking all my boxes well. Okay, let's actually take advantage of this, and kind of illustrates that point really well there. So that's a good that's a good way to look into it as well. In terms of Aussie CADs, again, a lot of range price action here, so you have to be extremely careful taking any type of trades in this area, especially intraday. Again, the best way to utilize lower time frame price action is to have the higher time frame buys. If you've got the higher time frame buys, lower time frame price action becomes so much more simpler to digest and to trade and to find entries, because you have a duty for lower time frame. The lower time frames are there to execute the higher time frame buy. So you're going to be a lot more confident with the lower time frame because you know what you're looking for. With the higher time frame right now, the daily chart doesn't propose anything to us right now. We're in a range. We're not even at the high of the range. We're not even at the low of the range. So in terms of a meaningful opportunity, there's nothing here. This is pure noise. So me going to the 4 hour chart doesn't give me any anything new. Me going to the 15-minute chart doesn't give me anything new. It just makes me look at the noise in a bit more detail. So I wouldn't do anything here, really. I mean, the only thing you could look to do, which does have some merit, is to short the range on the 50, buy the range in the 50. So price does get to the high here, expects it pretty well. That can give you a nice mean reversion opportunity, and likewise with the low here, provided we reject well. Even that, again, you're still trading a lot of noise there. But that's the only meaningful opportunity you can look into, because we've established a bit of an equilibrium here. This is kind of like the balance to the market. If we push to the extreme and price rejects it, well, we've got a good chance of returning back to the mean. Likewise with the low here. But again, we have no advantage from a macro scale, from a high time frame scale, so it's just pure noise, really. You don't have that higher time frame advantage. The lower time frame loses. Lower time frames only become useful if there's an idea on the higher time frame that you're trying to execute, um, especially in a market that's in a range. You could say that, okay, if the market's in a trend, I don't need the higher time frame to give me anything crazy. As long as the higher time frame is in the trend, then I know what I'm doing with 15 or whatever, kind of looking to flow with that trend. But if it's in a range, you're not at the high or the low of the range, then no advantage of where price is trading. So I'd be extremely careful with doing anything on the 50 for Aussie or anything lower than daily. If we push to the high of the range or the low of the range, okay, that's useful. Anything else, not useful at all. Anyway, guys, we have approached the end of the stream. I hope you have all found it useful. This is the last stream of the year. It's been a bit of a roller coaster. I've got plans for next year, exciting plans with where I'm looking to take the channel, the community as well, which I'll be sharing with you guys as we go along. And yeah, I'm really grateful for all of you guys tuning to the streams, finding use in the streams, liking the stream, subscribing to the new followers we've gained, followers we've lost as well. But yeah, I would do a kind of recap video of 2025, some advice and some learning that not only I've learned in 2025, but potentially, as a community, we can learn to go into 2026 and make sure that we kind of all take our trading to the next level. Yeah, every kind of month, year that we get in the market. So yeah, it's been a roller coaster, but on to bigger and better things next year. I really do appreciate each one of you tuning in as well. Um, yeah, more content, more education to come into the next year as well. So really, really appreciate it, guys. Hope everyone has a great New Year's as well. I'll drop like a New Year's message as well, like a New Year's video. So do look out for that. Guys, really appreciate you guys tuning in for 2025. Lots to come 2022, 2026. Have a great New Year's. Rest, recharge, review, come back stronger, all of the above. But really thanks. I really appreciate it, guys. Appreciate Yusuf. Have a great New Year's, and I'll catch you all in the next one. Take care.